Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, John shares his path from a non-target university to his current job in real estate private equity in South Florida. Learn how he was able to land his first internship in M&A, how he managed to transition an internship role into a full-time offer for a family office post-graduation, and what he did when he was fired 3 months later. Listen to hear what saved John countless times when his career could have taken a very different turn for the worse. Enjoy. All right, John, welcome to the Wall Street Oasis podcast.
Yeah, thanks for having me, Patrick.
So it'd be awesome if you could just give the listeners a short summary of your bio.
Yeah, sure. Originally from Connecticut, went to school down in South Florida, a school called Lynn University. I first started out not really having any clue of finance or anything. It's not a finance school, but luckily I had a couple friends that were interested in business and all that, and we slowly started to kind of progress into that. Started an investment club together, turned it into an investment fund, competed in some finance competitions, and eventually, kind of had a mentor who hired me at a family office, who kind of told me what investment banking was. So it wasn't until I really graduated that I knew what really the world of finance looked like. So my first job at a school, as I was saying, was at a family office, learned about banking, and from there, found my way into it. I was hired at a boutique bank in South Florida, where I worked on natural resources transactions, M&A, equity and debt, and other advisory work. Kind of liked the buy side more, from my days at the family office, and eventually, like many others, tried to progress that way, and ended up at Blue Arch Capital, where I'm doing real estate private equity now.
Awesome. Let's start all the way back at. You said you're from Connecticut. Why did you end up at school all the way down in Florida and Lynn in particular? And what was the thought process? Was like family pushing you to go there? What was the situations?
My parents wanted an early retirement, so they said, we want a family down there now, so you go down there. We'll come down soon. No, I had a bunch of friends from my area in Connecticut go to school down at this university and others nearby. So I didn't feel like it was that far of a jump, even though it was a couple-hour plane ride. It really didn't feel that far for me. So I did have some family ties down here. I had grandparents who had a condo down here, so I'd been down here. So it felt close, but I didn't pick the school for merit. The school I went to it was a very fun school, social.
What was your thought process in high school, kind of leading up to what school you would go to? You said like you didn't even know what investment banking was, but was there some kind of idea of like finance? Because I saw you majored in like investment management and stuff. So was its family in the business at all? Was it,
No. My dad's an architect and project manager for renovations, home renovations, and my mom owns a printing and mailing company. So very far from finance. No one in my family is professional services, more teachers than lawyers in the family. So, for me, like, business was really, I saw it through an entrepreneurial lens. Like both my parents were business owners. My grandfather was business owner, like uncles were business owners, like all small businesses. And so that's really the lens I had growing up. But, as far as why.
Did you want to be like your own business owner eventually? Were you thinking?
I have it imprinted in my head that, one day I need to be my own boss. So, I'll figure out how that works. But, in investments, you're never really a boss, I guess. You're always reporting to somebody.
So your parents are kind of like doing their own thing. They're like, why don't you go down to Florida? You had a couple family friends who had gone to Lynn. And so you're down there, you're having a great time, obviously. But is there, like, at what point were you like, hey, I need to get an internship? Or you said you had a mentor, but was that later on after you graduated? Or like, when did you get this mentor that kind of started?
Yeah. So, the mentor I got was really at, once I had my first internship, or really second internship technically, but like first real internship.
Well, let's talk about that. Like freshman summer, what happened?
Oh,
Nothing?
freshman summer, I was coaching sailing and like
Yeah.
I was living on a boat and anyways, I was having more fun than I knew what to do with. I did
That
that
was
for a
in
couple of
Florida?
summers actually. So it wasn't I didn't know that there were such things as like internship between your freshman and sophomore or sophomore and junior.
Hmm.
It didn't occur to me until I was a junior in college that um, I needed like an internship experience. My first like interview that I pursued was for Northwestern Mutual. I wanted to be in investments. I don't know. It just had struck me. I'd followed stocks in the past and
Hmm.
watched Jim Cramer and all of that. But so I applied to Northwestern Mutual. I got a job offer, and I talked to like 4 people, and they're like, "Yeah, we're not buying insurance from you, though. We like you." And so I didn't go that route. Very quickly, for my personality, people recommended that I didn't do it. So I actually there was a professor at the school whose
There's
family
a
owned
there,
it.
there's a lot of people who kind of end up in that route in the Northwestern Mutual kind of umbrella where end up selling insurance to their own family or like Cutco in the summer because they don't know what else
That's
to do. Tell me about
yeah.
like
Well, it,
how did you get away from that? Because it looks like you did get some sort of relevant internship. Was that your junior year?
yeah. So as I was
How did you
getting in,
land that? Like, how is that even possible without knowing? Like, because it was in some it said M&A on it. So did you?
yeah, exactly. So, by that point, I had passed on Northwestern. I'd started an investment club and like had talked to a couple of people in finance and all that, and kind of built my relationships on the faculty of the school more. And one of the professors there, his parents or his dad was the founder of this firm, and just vis-a-vis the networking, there was a local partner that I could get some time with, and I would say it wasn't necessarily like a full blown internship. It was more like apprenticeship. I worked directly with a partner at the firm and did whatever, and he kind of just spent more time mentoring me than I spent in helping him. So it was
Did
more of a fun
you
thing.
did you actually do any modeling or any valuation, any sort of work at all, like
No,
or
not
anything like that?
not really. I mean, his idea of valuations was, yeah, it's 10 times EBITDA. That
Yeah.
was his entire thing. He would just, he'd look at a number, he'd say, here's the 10, 11, or 12 times EBITDA. I don't care what anything else. So, I mean, he was very, back of the envelope with everything, and it worked for him. He was involved in some very, very major deals. And not that I was really hands on with any of it. I did a little bit of help, like finding target buyers for things, but not necessarily modeling or working on a full pitch or presenting or
But you got
participating.
this, it sounds like you were naturally starting to network already with like your professors and stuff like that. Was that something that had been taught to you, or like who told you you had to start doing this stuff, or was it just a natural thing that occurred to you?
I the finance professor at the school is really cool. I'm still friends with him, and I'm
Yeah.
engaged and getting married. And he's coming to the wedding, and so I'm like friends with him, and like he was, probably one of the better professors at the school, and so I just kind of clung around him, for
Mhm.
a bit, and so you just hang around people who have a mind for kind of something you want to do, and you learn. So I don't know how to say it other than that.
Yeah, no, that's fair.
I like being around those type of people.
So you're kind of approaching, you did that summer internship, we'll call it internships in quotes, but you did some work, but he was more mentoring you. That's great.
Yeah,
And it sounds like it was kind of during the school year too.
it was.
Yeah.
Yeah. So it
So
was a part-time thing, and I was, president of an investment club and doing my whole thing was I just, I had had enough fun already, and it was more time
it
to
was time you're getting
buckle
nervous. You're
down.
like, how am I going to pay for whatever when you
But
grad?
I still didn't know. I wanted to be in investments, and like so it's funny thinking back to like Northwestern, like I had no idea what people in finance did. Like even at this time, like even at that internship, it took me like another
Yeah.
year and a half before I really understood what investment banking was or what sales and trading was or what research or
Do you
you
think it's
know
just a maturity thing? I think there's so many people like that in college who are like,
yeah, I mean
yeah, finance. They're even
I
finance
think
majors.
there's sorry.
Even finance majors. Like I feel like half the time they're just like, oh yeah, I got it, but they really don't have it. They really actually don't know the difference.
Yeah, well, I think there's you have your target schools where people are kind of definitely surrounded by that, and then I
Hmm.
mean like my school, and there's probably more schools like mine and more candidates like me
Yeah.
than the other way around. And we had, I mean, the finance professor I was alluding to. he was just an incredibly wealthy individual from family businesses, successful family businesses, and he was investing his own portfolio.
Mm-hmm.
And he got a PhD in econ or something, and that made him a teacher. So, he was giving more life. Like, hey, here's how I manage my portfolio. Like, here's what I do with bond. Yada yada. But like, he didn't break down like, okay, career track, banking, private equity.
And you didn't have Wall Street Oasis yet, or had you found it yet?
I hadn't. Wall Street Oasis came after I graduated.
Okay, so you are kind of you have that internship, which is great. It just makes you're the president. You founded that club. You have an M&A internship on so pretty good start here. So you're kind of you're approaching graduation, and what's going on through your head? Like, I don't have a job. Are you freaking out?
Yeah, well, so first
of all,
I didn't realize how good an M&A
intern. Are you partying on the side a little bit still in your senior year? I hope.
No, I was taking some extra classes. I added like a minor, and we actually turned the investment club into a fund. We raised money and like got it from the school, and so like that was me and my partner, in the program. So we were really buckling down and working harder than ever. But so I didn't realize first of all, how good an M&A internship looked. But so it ended up being that I went to a career fair where there was no finance stuff, not even Northwestern Mutual showed up for this one. And I walked up, I'm just talking to all the people at the booths and whatever. And one of them was a company that was owned by a family office that I had known in the area. It's called Markville Capital. And, I didn't know the term family office back then, but I thought it was just a private equity firm, from my eyes, and a private investment firm. And so I said, hey, like, because they had the Markville Capital stuff. I was like, hey, is there any jobs at the Markville Capital, not the company that was sitting there actually advertising? And they said no. And I pushed through it, and I said, can I talk to somebody? Can I talk to somebody? And after a couple of days, I got in touch with the principal investor from the family office. And he happened to
let's rewind, because that's really interesting. Sorry, there's a little bit of echo. I don't know if that's me, but basically, I'm curious to hear when you say they said no, there's no job at Markville Capital. When you say you pushed through, why did you push on that specific instance? Because you knew it was like they were putting money to work, and you're like,
no, because it was the only opportunity.
Like the only
I'm sitting at a job fair
finance,
for a school that doesn't place people in finance or investments, and this is as close as it could be. And they said no, and I said, "Are you sure?" No. I said, "Can I talk to somebody?" And they said, "Okay." And after a couple emails back and forth, it turned out the guy who was the principal was from my area in Connecticut, and not that we knew anybody in similar, but he said he saw the internship experience, which was internship, and just local, and I'm from his area. You want to come work part-time? Like, we got you 20 hours here, and I'll do whatever it takes.
So you got a part-time job as you graduated?
That was still while I was working. So I was working 20 hours, running starting up and running the investment fund and school. So.
Oh, so for the Markville Capital, it was running the fund. So when you say running up a fund, tell me a little bit about that. So what do you mean?
That was the student managed investment fund. Okay. We raised some monies, and we actually, it's unfortunate we didn't get to make any trades because we were too busy kind of setting things up, and the money's sitting there, and students are doing stuff with it now, but not my generation.
So as you're kind of approaching, so you have this other internship now, private equity analyst. So when did you graduate, and when was the transition? Where you just worked straight through?
So I interned from January to
September.
May.
Okay.
It was January to May as an intern, and then I recruited at other. I used that experience to kind of like try and recruit other places. And the guy who I worked for there, who ended up being like a mentor to me, he said, "Go like recruit, go interview, get the experience, and bring an offer, and maybe you'll get a counter, from us, or you get an offer from us." And so I did, and they offered me, and so I worked for a couple months as a full-time analyst after that point.
Do you mind sharing the pay, or like what were you getting before you graduated and then after, like from intern to full-time? Was it okay pay, like 20 bucks
it was like $10 an hour, and then 40, like low 40s.
Okay.
And it was so short I didn't collect the bonus.
So tell me why it was so short from a few months just full-time, or just through the summer it looked like full-time.
Yeah, so we invested in a private. They had done a private equity investment, and families are different from real private equity funds. You have family constraints and things, and they hired a lot of people, and there ended up needing to be kind of a downsizing, internally. They kept running the business successfully after, but at that point, they didn't foresee the need to do more private investing and neither have an analyst on staff. So, I was, there was no other junior people. It was the principal investor and the family member who ran it.
And so you were the only one let go, or was the principal investor guy let go too?
No, he wasn't. And he actually was, kind of like a partner and everything. So, he was.
That's kind of tough because did you have another offer to go somewhere else when you graduated?
No, so that's the thing. I mean, I got
It's kind of
hired
still your
and I had
best
done
option.
my,
Yeah.
yeah, it was really sad. I mean, for me, but, to be honest, I look back and it's actually one of the best experiences that could have happened to me. I mean, I had saved a couple pennies from a job, even though it wasn't 100,000 or whatever, New York banking salary is. I saved a bit of money, so I was comfortable.
What is $40 an hour come out to be based on full time or what you're working?
40,000 a year.
Oh, 40,000 a year. Okay. Got it.
So,
Okay.
yeah.
So it was something that you put a little bit of money away over the summer as you were working there. And then as once you hear you're not going to have a job, whatever, 3-4 months in, what do you start doing? What's your first thing when they tell you,
Well,
hey, there's
there
a
was
downside?
no 2 weeks or anything, so it was
It's
unemployed
just
at that
done.
moment.
It was like done.
So it wasn't. There was no warning because I wasn't the only person. There was a couple of people from the portfolio companies. But essentially, what I did from there was I did call everybody who were in South Florida who worked in finance. So like,
How'd you get that list?
that was actually a Wall Street Oasis list, I believe. It was forwarded to me from somebody else. Maybe it wasn't Wall Street Oasis, but it was a list from provider. And
Oh, I know. There's a thread called like summer internships by region or something. It's a crazy
yeah,
long
it,
thread, and they have different regions. So like Florida was probably one of them, or like Boca Raton, or like
it was,
yeah.
it was. And so I tried reaching out, LinkedIn. I went on Google Maps and like searched like investments Fort Lauderdale, like because like people don't list stuff the same way down here, and so like you look on the map and see like, oh, like here's this firm that didn't show you, and so call them. But it turns out, like you can do a lot of the networking, but speaking to people multiple times or having a close relationship with someone, I think is far more important.
Mm-hmm.
And that's what turned out helping me kind of recover, I guess you could say, from unemployment. So
That's what saved me when I got
it
fired.
wasn't that long. Yeah, so for me, what ended up happening was, yeah, so for me, like having a close relationship with somebody, turned out far better than calling, the results I got from calling, hundreds of people. So there was a couple of people I spoke to more than once and followed up with a couple of times within the span of a couple of weeks. And that's really actually how, I had my success. There was an investment bank, kind of local to me. It was one of the first things I hit, on my reach out, and I reached out to 4 or 5 people, some directors, a VP, and the analysts, and people in different divisions. And one guy got back to me. It turns out it was like this guy was like like my girlfriend's sister's, friends, fiance or friend, boyfriend. I don't know. Anyways, it was a relationship through the grapevine, and so we ended up like speaking like a couple times, like 2 or 3 times, and over 6-7 weeks when I was unemployed, I talked to him 3 times, which for networking I think is quite a lot. I think when I think about it, usually I speak to someone like once a month to like once every 2 months, 3 months, whatever. So I stayed on top of him, and essentially what happened was he said to me, "Hey, I'm quitting this Friday. They need another analyst, and they don't know it yet. Do you want the job?" And I said, "Of course." And so I came in. He gave them 2-day notice. That day he found me to replace him because I talked to him. I said, I want this," and he had like, if I didn't keep following with him, like I don't know that I would have gotten it. And I'm like,
Why did you know to be so aggressive? What made you so comfortable being that aggressive? Because don't you feel like he was working in one of the few places that was like an actual banking job down there.
Yeah.
And so like, what did you worry about, like burning bridges? Why weren't you like networking with people up in New York?
Yeah. So I was trying to start a life down here. I
Okay.
had a girlfriend, and to be honest, like I
You
didn't
let,
come from like this like whole finance background. Like it kind of fallen to me, I guess you could say. So it's not like I knew that this M&A internship was that great, or working in a family office was like all that. Like to me, I had a job in investing, and I had a lot of fun, and so to me, it wasn't. I didn't make the connection at that point that I could go recruit in New York even. Like, yeah,
yeah,
and
you
to
just
be
like,
honest,
you just
like
said, hey, I'm going to
Cumberland
keep looking for,
University,
yeah, I'm going to keep looking for a job around here because that's where I want
yeah.
to be. And that's the reality of it. You didn't think, hey, let me go open up my options. It probably would have been your next step if you had kept striking out. Just,
No, so I actually was going to give up the search, and so part of the reason why I was so aggressive with people, and I don't want to say I was aggressive because I thought I was a nice person, but like it was
yeah.
aggressive in a sense. But I had a timetable. I had only saved up so much money, and so it's at that same time as I was reaching out to him, I was actually starting because I told him 2 months, and I have to have a job, and so I was starting to schedule interviews for like financial planning and analysis. Not that that's a bad thing, but
Mm-hmm.
like it wasn't the target. I gave myself 2 months to hit, and I was doing practicing modeling. I was really gearing up to try and be in some kind of I don't call high finance job of some sort.
Mm-hmm.
Practicing interviews, the networking stuff, and so I was starting to interview at other places. I've interviewed like as a pricing analyst, which is actually kind of cool, but like not what I wanted. Like cool, a bunch of different things, and so it just turned out to be that these guys needed somebody you knew was leaving, and
How did you keep how did you keep following up with this person and make it seem like you hadn't just talked to them 2 weeks before? How did you keep bringing up new things? Was it that he wasn't being responsive every time, and so you would just lob in another email every 2 weeks, or was it, hey, let's get on another call? Like, didn't he feel like after the second call or third call, wasn't he like, that's enough, man? Like, I've already told you everything? Or did he kind of start giving you hints that he
no.
was
So
leaving?
I had the first call, and it was nice, and he said, "Yeah, just follow up." And so I just followed up, and I think the second email he went back and forth, said, "Hey man, I'm busy, I can't talk right now," or something. And then the third, I said, "Hey, can we talk?" And he said, "Sure." Or maybe that was even at that point. I think it was text. I sent him a text. I said, "Hey, like you're around to talk. I wanted to see if there's anything that's opened up or whatever." And and he just called me or whatever and was like, "Hey, like this is what's happening." Uh, yeah. So it was pretty cool. It's.
So how did he sell?
Uh,
How did he sell you to that? Basically, like, hey, I give you 2 days notice, and I have a guy for you. Is this what he
well,
told?
to be honest, I mean, there was it's not the most attractive opportunity. There was, I had to start out as an intern again.
Mm-hmm.
So they were very much on this firm was very much more about like getting to know you over a little period of time before giving you a full-time offer.
Mm-hmm.
Like I
Sure.
didn't have an opportunity to intern with them over a summer or anything, so like it was very hard to gear that up quickly. So I actually worked as an unpaid intern for 30 days. So
And so
they
you
said
basically had your bank account was at zero, basically, by the end of that.
by the end of the 30 days, well, I told them basically this was what I told them. I said, um, I'm happy because they said you're going to be an intern. I said, okay. But what was my hourly salary? And they said zero. And and so I said, okay, I can do that for a month. Like after a month, like if you don't like me, I'm gone. I'll go find something else to do, and it won't work. So it's to get in, and I was fine doing that. As I said, I saved up enough just to kind of skate through, but it was
And
close.
did you
So, and I
actually?
was recruiting at the same time too. So like I actually had other things going at the same time. So if that had fallen through, there were a couple of things were actually just as interesting, not necessarily banking, but other like real estate investment things. So like
Interesting.
which is
So
anyway. So
tell me a little bit about the actual just like 1 month, 30 days thing. Was it long hours? How did you make a good impression? Because obviously they extended you the full-time offer and you ended up there for almost 2 years. So tell me how did you kind of approach those 30 days? Was it just like get in super early, stay super late, ask for work? What did you do? What was the attitude?
It was 100% that. It was a firm where there wasn't a lot of middle. So there wasn't, at that point, there was no other associate. You had a couple like VP directors and then MDs. And I made myself like full frontal to the most senior people and to the people local who were called decision makers. This was a privately owned company.
Mm-hmm.
So it's not like it was widely held with a number of partners. There was one owner, really. And he had bankers that he really liked and had good relationships with, and those people were in his ear, and he became friends with them, I guess, or not friends necessarily, but like you became close and you made yourself aware. So there was partly that, and then I also came up with some like creative ideas on how to improve the current business. They had been doing quarterly industry reports for one of the divisions that they covered, one of the coverage groups, but not financial resources, which is where I got staffed. And so I said, hey, let's start doing these. And so I set the whole quarterly report up, and this was in the first 30 days. I set the quarterly report up. I mean, there was a lot of Capital IQ plugins, whatnot. I tried to improve the business, and I think that went a long way.
Cool. So then they give you an offer. Is it in the similar salary range, 50K, 60K?
A little under.
A little under.
We live in Florida. It's
you live in Florida.
No, I get it. Tax. Yeah.
So okay, but you're just happy you have a job, you can pay the bills at this point.
So happy.
And so at this point, you're like, I got a job, I'm happy. What's your thought process as you kind of extend, you get to your first year? Are you thinking buy side, I got to get back, I want to be more an investor? When does real estate pique your interest? Tell me kind of how things progress through those 2 years.
Yeah, so the first year was just learning. I, learned how to be really proficient in modeling, natural, both. I did do a little bit outside of natural resources, but predominantly what I did was, oil and gas, mining, and some transportation, like marine shipping. Mm-hmm. So I became incredibly proficient in like modeling, like three statements, and just understanding, financials, certifications and all that. And I think I tried to learn the industry lingos a lot. And so like terminologies and be really like understand. And so like I actually, after 4 or 5, 6 months, I got involved with a lot of client calls, client meetings. And by the end of the first year, they actually were able to leave me in the room with clients, and I could like understand their business models. And when they said, certain, things like, BOE equivalent, or, how many wells we're going to drill this year, or this land package, this spacing, I could understand it all and have a conversation around it. And so this was a very small firm. This was 40 people, and the banking staff was probably 15. So, being at the small firm, I got a lot of really high level exposure, which for me progressed my career very, very fast. Not necessarily monetarily, but, from a skill level and just being able to sit in front of a senior person.
Super valuable experience for somebody who's only been on the job for a year to be left alone with the client like that. Tell me, were the bonuses like tiny, or were they like $5,000, $2,000 for like a thing, or like were there no?
Yeah, it was tiny. I mean, like by comparison to what your viewers expect, it's
yeah. So okay, so you're
for who's giving it, they were very happy to be giving it to me.
Yeah. So, but you didn't expect that because, you're in a very low cost of living area. It's like you're learning, you're happy with the job. So why even jump? Why not just stay on? It sounds like you're kind of filling in a nice middle management role. You could have been like promoted to associate or whatever.
Yeah. So for me, I think what happened was I think I started getting too much skill too quickly, and it kind of bit me in the butt. And so like, not to say that I'm like, I was like the most senior person in the room, but like, the end of the first year, I was like sitting around the table and we're talking about like strategy and like what do we want to achieve for the year, and like setting goals for our staff. And I think we got 6 months into the year, and like, we were getting about 3 or 4 months in at this point, and like I didn't see any progress. I wasn't like, we weren't adding like tons of new clients, like we had our old clients and we weren't really branching out. It was like, we want to do IPO, we want to do these different things, and I didn't necessarily see some steps getting there. And so like, I felt like I was, as an analyst or whatever, I was doing a lot of heavy lifting far beyond what an analyst should be doing. An analyst should be sitting back, listening, learning.
You were like trying to drive the whole business forward, and like you realize you're like, no one's actually taking the reins here.
Yeah, it was a bit of that. So, I mean, not
Yeah.
to, there were certain directors would, obviously do a good job with clients. They'd identify certain business, but it wasn't like a real, a lot of push. And we're in small and micro cap companies, so you have a lot of ground to cover. So it's very hard to know if you're covering good clients or bad clients, but you have your time. You can't double yourself as a director. So it's hard. So,
Yeah.
anyways, the business, for me, I learned quite a bit about, but just business in general, from being in there and trying to grow a platform. So, I did see it slow, and for me, I wanted to find something that was growing, and also to be being a principal investor. I think that to me meant a lot, and you kind of control your destiny a lot more. I think being an active investor.
So
So
as that first year you were learning a lot, that second year, it sounds like you were kind of getting a little bit of an itch to kind of move to your next thing. So how did you approach that search now from a position of more strength, ideally, not unemployed? This time around,
yeah.
how did you approach it? Was it just more LinkedIn, just start opening up the same kind of conversations? Or did you kind of slow play it longer, waiting for the right opportunity? Did you have tell me about like the interviews you did? Were there any like crash and burns, or did you like were you were you getting multiple offers? What was that all like?
Yeah, so for me, actually, I wanted to stay in South Florida. I was kind of doing this in parallel with studying for the CFA, which, yeah, I was taking level one at the time, and work. And so I really didn't have that much time. I didn't dedicate a lot of time to outreach. I did actually a lot of like LinkedIn applications and like, well, someone half-assed it.
Mm-hmm.
Um, and then I worked with a lot of recruiters. Without going into the names, a couple of them, I think they rank, in tier 2 and 3, and none of the elites, but
Mm-hmm.
some good recruiters. I like the people I worked with, and so they put some jobs, typical private equity. My resume didn't get a lot of hits on those, just simply because I didn't have like a corporate. I was doing natural resources modeling, and there's no oil wells or gold mines down in South Florida, really. So that didn't necessarily hit. That was the first stop. I really tried to make a push into traditional PE, and that wasn't going to be a fit. It seemed like.
I'm sure they kept trying to throw Houston jobs at you.
I did get some. So I did interview outside of Florida. I didn't want to leave, but I did take a couple interviews with some other middle market banks, BMO, Baird,
Mm-hmm.
a couple others. Those progressed. I ended up, kind of passing on them because I got through a couple stages, and I really said, I'm really not going to leave. I'm going to stay here. But what am I doing? So, anyways, it was good to know that I could get through some interviews, but for me, it wasn't where I wanted. There was a couple of
You really love South Florida.
everyone's going to be living here soon until we're underwater. It's going to be underwater. It's going to be like Atlantis here. You're going to see all these like very stern look skyscrapers and like related group skyscrapers down here, and it's all going to be underwater.
Yeah.
So no, Florida's great. But so yeah, for me, I want to stay down. I ended up interviewing with a couple of real estate groups, a couple of direct lenders, like credit funds, called like that. Um, the credit funds, I got through a couple rounds of interviews, and it was kind of at the same time as a couple of the real estate interviews, and one of them was the firm I ended up accepting the offer.
Mm-hmm.
Everybody had kind of tests, at some point. I think I went through 2 or 3 rounds. I did like for the company who ended up hiring me. I did like a modeling test. It was like a 2-hour long time test. And then I did like a whole presentation. So like
A
I had
2 hour
to
modeling
they
test.
gave
So
me
like, what were you doing in that? Like building a 3 statement model? Like they gave you a case and you had to just build up projections and different scenarios and stuff.
No, this was actually a very interesting one. So they gave you like parts of the financials, and they gave you parts of information, and like you would have to fill in everything. So you'd have to know a little bit about, and this was like real estate, like a real estate deal, not necessarily like a REIT.
Mm-hmm.
So like you had to know parts of real estate. You had to know financials. Like, so like there was like things on, tax liabilities and like stuff like that. There was things on occupancy, and there's things on like NOI and cap rates and different valuations, and knowing if something is intrinsically like under or overvalued. Like, so like you had to have a lot.
I need to get that. I need to get that case study from you. If you still have it, I'll pay you for it for our real estate modeling course. It sounds awesome. Because we have a bunch of cases already in there, but that one sounds pretty cool because it's like a mix. It's like a puzzle almost.
Yeah, it's a really good one. So
yeah, we could change it. We could change it and we hide it if they're willing to share, or change the name so it's not obvious.
Yeah, we can discuss. But so that was the first step. The second step was they gave me a public company, a public REIT, and I had to build like an investment thesis around it and figure out, would it be a good opportunity to invest in. One of the principals of the firm I work for was head of acquisitions at a shopping center REIT that would own minority pieces of companies. So they would go buy like 20 or 40% of this company, 20, 40% of that company. And so but in the public market, so to say. And so it was kind of through that lens he gave me, said, let me know if you think it would be worth us taking a look at doing, a minority investment in this company. And so I gave them my analysis. It ended up being like somewhat in the ballpark. It wasn't perfect. I guess it was better than whoever else was interviewing because I got the job. But yeah.
Tell me a little bit more about that. So you're saying he was asking you if a minority owned, like looking at other REITs, like what do you mean? Buying them up public in the public markets?
We raise a fund, right? And we're investing in different things. You can buy direct property, or you could buy like a lot of real estate investors did this year, which was buy stocks in companies or buy their own publicly owned stock, whatever.
Yeah.
But so he was saying like we would go raise money like for private equity style money to go buy a piece of the public equity of a REIT. And so this was a multifamily REIT, an apartment REIT. And it was basically saying, okay, like, is it worth taking ownership in this business? Like, is this business today fairly valued? Or is it undervalued, overvalued? And to be honest, at that point, I really didn't have enough workings of like net asset value to really grasp it. I did like a whole thing on comps, and like on a comp basis, it worked. Like, like I spread the comps, as you could say. So, but like that, a couple of like traditional like banking valuation methods that I've learned, it seemed fairly valued, and it seemed like an interesting investment opportunity compared to its peers. And so, I pitched it on that basis, and like I missed the point that like on a net asset, like what the real estate was worth versus what the REIT was valued at in the public markets. It was like undervalued, and like we should buy it all day long, something like that. That was really what he was looking for.
Interesting. So you still got the job. Tell me how you've been there for now almost in your third year. So and you got promoted. So tell me, things are obviously going well.
Yep.
What's the real estate private equity? How should the listeners think about that, or your job specifically? Is it a typical private equity fund where there's you guys are serving as the GP, the general partner, and there's limited partners you guys have raised an actual fund?
Yep. So I'd say to listeners, there's two types of real estate private equity firms out there really you need to think about. And there's operator funds, and then you have like real private equity funds where you're actually the allocator. And so, different groups have different things. Like if you think about like Greystar, for example, which, everyone's lived in one of their apartments if you don't, So, they have an internal acquisitions team. All they do is buy multifamily, essentially, and so they have, private funds. That's all they do. And so you could technically be in a real estate private equity arm of Greystar and be, you have your internal operations and all that. Then there's more what we do, which is invest with other operators or partner with other operators. And so we don't actually have an internal operating capacity. We don't do our own property management, which is like the key thing in real estate is like, do you do your own property management, or do you outsource it, or how does that work? Do you third party it? Do you have them invest with you? But, we always partner with an experienced operator that, invests a lot of money in all the deals that we do. So we know they have skin in the game.
Mhm.
And that's the side I'm on. And so, I think it's very interesting. Our firm does a lot of equity. We've also looked at debt investments. And so, when you're on this side of private equity, things can be a lot, I think, maybe a little bit more interesting when you're in acquisitions role within an operator like Greystar. All you're going to do is look at multifamily, and most likely it's only going to be in 3 or 4 cities. And so you're going to get to know those cities really well, and which hotels are great there. But um, when you're on kind of my side of the aisle, I think um, you get to see a lot of different asset classes. So thus far in my career, I've underwritten and looked at deals in pretty much every type of real estate in most states across the country, of many different property ages and different parts of the capital stack. And so, to me, that's very interesting. Like, always keeps me going. I've heard people burn out from the typical acquisition job where you're just looking at one thing. There was a girl who was at the same school as me who worked at a really prominent real estate private equity fund. Won't name it, but she was an acquisitions person within one real estate property type, and she just couldn't do it anymore. She said, "I have to move out. I need to move into a whole different. I don't even want to do real estate anymore because this is like I'm intellectually stimulated by new things, and this is not that stimulating. It's the same thing every time after time."
Interesting. Yeah, that's a really good point. Do you feel like with your time there, has the learning curve started to flatten out? And it sounds like since you're given the optionality of being able to look up and down the capital stack, there's that, which is interesting, in all the different deal structures. But there's also you have a lot to learn there, but then also learning all the different asset classes on top of all that. There's just a lot of different combinations and everything, which makes it kind of interesting every day, I guess.
Yeah, it's very interesting. I think I have a good sense. I may not be as deep as that acquisitions person. Like if I underwrote a deal in, multifamily deal in Charlotte, North Carolina, I don't think I would get anywhere near as close to the final purchase price as the acquisitions person from our partner group that really just knows that market. They're going to be a lot more dialed in there. Um, I'm going to be able to understand their underwriting pretty well. And
Mm-hmm.
I'd say I'm not going to be that close. We're talking about a couple 100,000, maybe, dollars off, which at the end of the day, that's who wins and loses. But as far as a breadth goes, going across the country, being able to look at different things, I think, especially being junior in my career still, I think gives you that optionality. It also when you look at a deal and it's like, hey, this one pencils out to 10 and it's an office deal in Atlanta, and it's like, hey, here's a multifamily deal in Charlotte, pencils out to 12. Like, gives you an idea of what's going on in the world and what your LPs are thinking. And I don't know. So for me, I've enjoyed it a lot.
How about pay? Has it improved a lot, or?
Yeah. On the buy side, when you're at a growing firm, a small growing firm, we're a couple employees here, so smaller as a firm from the last company I worked at, but as far as like trajectory goes, I think it's pretty solid.
Do you mind
And I
sharing
think,
base or range or anything like that, or bonus? Is the bonus like?
yeah, all in cash is, low hundreds, 100, plus a little around there. And, but, again, being at a small firm, there's not a lot of mouths to feed. And so I actually have a fair amount of promote or, carried interest. So, for me, it's incentive
Explain to
to
the
stick
listeners how you're able to calculate what that might actually be worth, the promote or the carried interest, because I know some people get confused with that. Do you have a certain way to think about it? Are you assuming like the funds under management, assets under management, double in a certain amount of time, or the fund doubles, rather, you return a 2x, a 1.5x? How are you thinking about that in terms of how you calculate your promote or carry?
Yeah. So the way I think about it is we have a fund target, and I'm privy to that. We're targeting 12 to 13% gross. And so this is on specifically one of our funds. We have many funds, but, for example, I have a piece of one fund.
Mm-hmm.
And so, I know what the target is. I know what those deals are looking like because I'm involved in them to some extent. And so, I build a model that goes out 7 to 10 years because that's the range of the fund. So it's either 7 or 10. And I run the waterfall, right? What the net proceeds to the GPR through the promote or the carried interest. And then I apply my percentage and I take an NPV on that and, compare what that would be to a cash comp today. And typically it's been pretty interesting.
Do you mind sharing what your carry is for different funds, or like what? Because as an analyst or an associate, is that new, or they gave you that promote right as an analyst, and then was it more like, hey, you get it if you stay kind of thing, or is it like is there a 4 year? Is it paid out as it comes in kind of thing, and if you're around, you get it?
Yeah, so it's no, so it's this. I got it as my first year as an analyst.
Mhm.
I got more this year, and it is on a vesting schedule, a 4 year vesting schedule.
Mhm.
Which for me, I mean, so the first year I'm halfway vested. This year I'm a quarter vested, and so each year, it more and more vests, and so you know I know I think if I stay longer, I'll get more into it. Um, but basically, I've gotten a quarter point of the overall promote, and so this is a 7 year vehicle, and just straight lining that, assuming it doesn't even grow, that quarter point, after 7 years, gets to be a nice number. And this is in one vehicle, and so we're in the process of doing a couple of vehicles, and so you get a quarter point in like 3 or 4 different things, and you get a quarter point for every year in those, and
eventually it gets to half a point, and then eventually they give you a full point or a couple points.
if that, I mean, yeah, I mean that would be pretty great, but
Yeah.
I've seen a lot of assumptions, optimistic assumptions in my day, and a lot of those go not work out. So I'm gonna underwrite it, as you could say, in a conservative manner, and look, I do it, and I also do a kind of a downside case on the funds, and I stress our exit cap rates, our exit values, you could say, the terminal value in our deals and our funds, and say, okay, like say we were targeting a 12, but we actually had a 9. Our hurdle is an 8. What does that like 1% actually give us? How much do I make? And like that's a pretty sad number, but it's still something.
Yeah.
So,
Sure.
but you roll the dice, and that's why I'm in the business. I mean, I was allowed to invest in the funds. I did, and I'll continue to. I think that's a great thing that I have access to. It's like kind of like a bond investment, if you will, buying the real estate we buy. So not too risky, I don't
Yeah,
think.
but there's some sort of preferred return associated with that or whatever.
No, I'm a
No.
typical LP in the fund too.
Okay. Okay. So, looking back at this, you had a kind of a what I'll call like a false start coming out of school with the getting fired pretty quickly, of no fault of
Yeah.
your own, and kind of just barely kind of scratching your way into IB, and then the transition to the buy side to real estate private equity. Throughout all of that, even though it's only about 4 or 5 years out of school, looking back at all that so far, what would you say is kind of been key, or is it just kind of just as things come, you just try your best? Like LinkedIn, what's been the most useful tool, and what's been the most useful kind of hack looking back?
I think it's a combination. I'll give you 2 or 3 things. One I think is always try and be, at your firm or wherever you are, in front of the most senior people and try and learn the most. So whether that's learning the technical skills so that you can pick up any model and do anything with it, that's important, but also learning the soft skills, which are in finance probably even more important. Picking up those soft skills around very senior people is incredibly important. And to be honest, if you're in investment banking, you're working at a great shop, you're in front of probably the most talented soft skill people in the world. So, you have no shortage of, if you can get the exposure, get it. I'd say that, that's one, and that will progress you personally. Two, as far as like getting out there, and meeting people, LinkedIn is fantastic. And in all honesty, I've fielded, a number of, just people outreaching to me. The person who actually filled my spot at the investment bank, I did the same thing as the guy who hired me. I got a guy from Minnesota who would work for free. He flew from Minnesota um, to this investment bank, worked there, and now he's in New York City at a middle market bank, and he's doing great. So, I think, being on LinkedIn as a giver and a provider, or as a giver and a taker, I think is important, being part of the community, like helping people, but also, being out there and getting help, whether it's thinking about jobs or school. Like I was considering a master's degree, and I reached out to 4 people, at the desired schools, and those people, told me what I needed to know, about the program, which you don't get on the website. So the networking is always important. And I think, the last thing is being a genuine person, just having good character traits about you, hardworking, show up first, leave last. Those kind of things sit well with people. And so, building yourself as a character, as a role player in an organization, I think will take you places. And when you're sitting in the interview, I think it'll kind of vault you above others. So,
Great. I love it. Well, we can end it there. John, thanks so much for sharing your wisdom and all your advice for the young listeners here. And if anyone wants to get a mentor session, John is available as part of our Wall Street Mentors. So check him out.
thanks for the plug.
Thank you.
Yeah, thanks, Patrick.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.